Hello everyone and welcome to my morning report chart appraisals on Thursday 7th of December with me, Rich Market Analyst at Hantec Markets. We've got a bit of a dollar rally going on and that has picked up, as you can see on the trade weighted dollar. We've moved above the reaction high at 93.50. Now this sort of starts to build a higher high and a higher low scenario, which, having broken that downtrend of the last sort of 4 weeks, now starts to sort of move the market into more of an uptrending scenario. So it's starting to build a trend higher, and this dollar is strengthening across the majors. Very slight gains against the euro and sterling, but dollar yen is pulling quite strongly higher, which is positive obviously for risk sentiment and across all these other majors as well. The Aussie and the Kiwi are interestingly weaker as well. But generally speaking, we're seeing this improvement in risk appetite, which again, this stronger dollar just is pulling gold lower. 12.57, 12.60 was that key October low. That has now been broken. So significant technical implications of that, and I will go through that in my chart analysis in a bit. But you've got the DAX, the CAC and FTSE all broadly higher as the S&P 500 and Wall Street generally just started to settle down a bit. We've had sort of recent moves to the downside starting to sort of settle a touch on that. Is this sort of a possible buying opportunity, you could argue, in this little retracement move? But certainly the dollar move is the key factor we're looking out for. You're seeing that the House of Representatives and the Senate are now going to be sort of in conference together to try and reconcile the tax reform bills, or the versions of tax reform bills that they both have. Big differences still in those bills need to be ironed out, and then that needs to be agreed on before that they can send it to the president to be signed into legislation. So we've still got that on the cards. But certainly the dollar is strengthening. We've got payrolls report tomorrow, so watch out for that. We might start to see markets settling a little bit more in front of the payrolls, but certainly at the moment we're still seeing a positive move. Now, in terms of data today, we've got the Eurozone GDP revision at 10 o'clock, expected to be flat on the quarter-on-quarter. It's mildly higher on the year-on-year, though, to 2.5%. Interesting, that. And then in the afternoon, we've got the weekly jobless claims, which are 240, which is basically where we've been for the last few weeks, really. 240, 230, 240. And that's at 1:30 today. Japanese GDP later on this evening, expected to mildly revised higher by to 0.4%. Now, my chart today is the DAX, and interesting moves on the DAX, I think, in the last sort of 4 weeks, really. We've basically built this trading range, and you can't really see this trading range as well in so much detail as you can on the hourly chart, so I'll just quickly look at the daily. But the indicators are all sort of pointing towards a range play. The stochastics have sort of unwound to neutral. MACD lines have settled around neutral. The RSI is 50 and settled. So it all sort of points towards a continuation of the range. And you can see here on the hourly chart, if I sort of zoom that up a little bit, you can see it better. Basically buzzes around. But every time we get towards 13,100 to 13,200, seems as though that the selling pressure comes in. Every time you see the market sort of going to 12.9 back to 12.8 as the bottom of that range, you start to see the buyers coming in. And again, we saw the market gapping down yesterday, big opening gap lower, but that gap was subsequently filled. And you're now testing the near-term downtrend that we've been in place for the last sort of week, really, on the DAX. The question would be, is this sort of starting to come up into resistance again? Yes, you've got this downtrend, but you might see a little bit further. You've got the resistance initially, I suppose you could argue, at 13.79, and then 13.18 being the key resistance near term. If you break above that, then you're starting to sort of build towards a retest of the range highs again. But as I said, every time you get towards 13.100 area, then you tend to start seeing the resistance coming in. So the fact is that we're still playing the range. We're pulling higher within the range, and the momentum is sort of building again. But is it getting to levels at which you're starting to see the market petering out? Tends to be that 60 on the RSI is quite often the area at which the market sort of fails. If it gets above 60, that tends to be the time at which the market goes towards 13,200 area, as we've seen twice. But generally within the range, a failure around 60 is a failure around 13,100. So are we starting to see that this will be another selling opportunity within the range? Possibly so. So that looks to be the case today. So positive momentum, yes, 60 ticks up on the day, but is it now approaching the resistance area once more? I think it is. So with that in mind, I wish you good luck in your trading today, and I'll speak to you later. Thank you.